Good evening, everyone. My name is Michael Glass from michaelglass.com, and I want to thank you for taking the time for watching my instructional video on how to prepare to invest in the stock market. Before we begin, we always like to start off with our disclaimers. First and foremost, any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, future options, they all have a level of risk associated with them. You can lose your money. The strategies that we talk about today are for educational purposes only. Future results are not guaranteed. And most importantly, any investment decision you make is your own responsibility. Trade at your own risk. So, as you know, we put together a 5-part trading series, again, to help you prepare to enter the stock market. It's not everything, but it's going to give you the foundation that you need in order to be successful. And the first thing you have to understand is you have to understand timing in the market. You know, as they say, timing is everything. Wrong place, wrong time, right place, right time. Timing is always very important when it comes to the stock market. Technically speaking, we're going to talk about technical analysis and how to apply that to your trading. Chart patterns are us. Sometimes people think chart patterns are technical analysis. You know, not going to really get into that argument, but we are going to talk about chart patterns that, again, can help you be successful in the stock market. Stop in the name of money. Risk management, one of the most overlooked aspects of trading, and why many traders fail. Not only because they fail because they don't have a stop, but a lot of times we get on Google and we look for trading systems and we're not prepared to trade them as the systems are supposed to be. So they actually may be a good system, but because we don't have the stop where the system says, but you have to stop where you can afford or where you can mentally afford, it doesn't work. So stops are very important. And finally, mental fitness for trader. I mean, in the end, this is all about training our minds to trade, but we do have a video specifically talking about the psychology of trading. So today, again, we're talking about, do you know what time it is? Are you at the wrong time and the wrong place? Are you in the right place but the wrong time? The market is what it is. And again, so many times people are trading strategies, but they're not trading the right strategies for the right time. Breakout strategies, reversal strategies, they're all great. You can go on Google and find thousands of them. But are you applying them in the right time? Do you know what time it is? So as I wake up in the morning and, I'm getting my kids dressed for school and sometimes I'm going out, I like to turn on the morning news, and which is so funny because if anybody knows me, especially growing up, I never watched the news. So as I morph into my dad, into my father, I'm watching the news in the morning, and I'm here in Charlotte, and sometimes I like to watch Wilson's World on WCCB or, in any morning show, specifically the first thing I'm looking for, and what do they show a gazillion times in the morning? Weather is on the ones, traffic on the fours, traffic and weather. They give it to you over and over again because most people, that's what they want to know in the morning as they're preparing for the day. Well, and when you're preparing for your day in the stock market, you need to check the forecast. You need to prepare for the day. You need to be aware of the terrain or aware what's coming across the country and into your area of the world, and be prepared for that so that you can properly trade. So as you check the forecast, is it going to rain today? If it's going to rain today, what do you need? An umbrella. There was a funny thing today on Mike and Mike in the morning, and Mike Golick says he never wears hats or umbrellas. And I'm kind of the same way, although I always wear hats, but baseball caps. But I almost never have an umbrella because, you're in your car, you get out of your car, I go to where I need to be. I'm not going to be walking around. My point being is, when it's raining in the stock market, how are you prepared? When it's storming the market, when it's storming, we just had the flooding in Texas. You obviously, what do you need to do? You need to get away. You need to move away. Do you know when it's time to sit on your hands and stay out of the market when it's stormy? When it's snowing, are you warming yourself up for the market when it's cold outside? Again, no matter what the market conditions is, are you prepared for that? And when I think about that, especially when we talk about knowing the time it is, we have those narrow range days when the market is just kind of going up and back in a real tight range, whether it's the indexes, whether it's a stock. When a market is trading within a range, are you applying the right strategies based upon that trading day? Or a trending day, when the market is moving, man, and you just want to buy every pullback. Or you've got the person that's shorting the pullback because they're not recognizing what time it is, what type of day it is. Low volatility days. You can really say a narrow range day might be a low volatility day. High volatility days. You can say a trending day is a high volatility day. Again, based upon the forecast, based upon the type of day is, you need to apply the right strategies. I remember when I first started trading options, there was this lady, Darlene something, from Better Trades, and she used to talk about her basket of trades, and when she would wake in the morning, based upon the market conditions, once she prepared at the end of the day previously, she would throw away half of them because the market, if you prepare trading setups, if the market's up, go long. If you trade trading setup, if the market is down, go short. You wake up in the morning, well, if the market is up, get rid of those short trades. Again, what type of day it is, checking the forecast, looking at the lay of the land, and applying the right strategies based on the time of day and the type of day. What are some things that can change the weather? What are some things that can change the attitude, the mindset, the condition of the market? Well, we basically know news. News changes everything. News overrides technicals. News overrides chart patterns. News overrides psychology of trading because it changes the psychology of the market. Things like earnings. Every time earnings season kicks off with Alcoa, FOMC, as we are here now talking about, are we finally going to start raising the interest rates? Jobless claims every week, that can move the market. The last Friday or the first Friday of each month, the non-farm payroll obviously changed the market. There's all these various things. Somebody speaking can change the market, and you don't even know it. Especially some of these more across the ocean, European finance ministers. A lot of times there are people speaking that, especially when you're not preparing to trade, you're not checking the forecast. There are some really good calendars out there. NASDAQ has a good calendar. Forex Factory has a good calendar. There's plenty of good economic calendars out there that for you to at least know the mainstream things. Every now and then something's going to pop up that we don't know about that change the market, but you need to be prepared for that. So once we understand the type of day it is it a narrow range day? Is it a trending day? And once we're aware of the news, and sometimes understanding the news and that really affects the time of the market. If we go back to our original picture, again, sometimes people have great trading strategies, but they're trading at the wrong time and they get bowled over. So if you're trading a nice pullback and then news comes out and you aren't aware of that, 9:55, 10 o'clock, there's usually news. The FOMC comes out at 2 o'clock now. It used to be a little bit later. 8:30, jobless claim. If you're in these trades and you're not aware that the market could change shortly, then you don't know what time it is. You have not identified your prime time. So it's not just identifying our prime time in terms of the news, but there are some prime times to trade in the market. I've got this from Trading Concept. Todd Mitchell, Trading Concept, put together this, and why reinvent the wheels. Some people want to sit at their computers and trade all day. I'm not one of those people. So you can identify the best times to trade. Now, for the stock market and futures, when the market opens at 9:30, some people don't trade that first hour. They call it amateur hour. I necessarily don't have a problem trading that, but I don't trade the first 5 to 15 minutes because a lot of the signals can be false because a lot of market orders are being placed. Someone who's a end of day trader looks at the market and puts in these market orders to happen the next day. And a lot of those are being executed. And so, if they didn't check their forecast, if they didn't prepare properly, if they didn't put contingent type trades in, and they just say, tomorrow I want to go long, and then news comes out and the market is down, but there's still all these orders going in long because people didn't properly place their trades. So I don't necessarily have a problem with playing the opening bell, the first hours, but there are a lot of people who avoid the first hour. Now, what's important is that, again, I said usually 9:55, 10 o'clock, there's usually some type of economic news, consumer sentiment, housing, all these little Fed surveys, all these things usually come around 9:55, 10 o'clock. So you can get a reaction to that around 10:15. A lot of times people say 10:30 is counter trend. Whatever the market is doing at 10:30, the market is going to do something different. What's most important about this is you see, a lot of people stop trading for lunch. When is lunch? I say 11:30 to 1:30. A lot of people say that, but some people, as you can see here, some people stay out of the market all the way till 2 o'clock. People come back from lunch. You might see some moves. I really prefer not to trade in the second half of the day, because you don't have as much momentum usually as you do in the morning, because a lot of people have made their money and they're off on a golf course. But if you're going to trade it, you definitely want to avoid the lunchtime. And then we got 2 o'clock. Usually the market's going to continue. Whatever trend it is in the morning, at 2 o'clock, it will pick that up. And then around 3:30, they have what we call a counter trend trade, to go against what happened. And of course, we have the closing bell. So again, when we're identifying our prime time, what are you going to trade? Are you going to trade that first morning move? Are you going to trade the afternoon? Based upon your job, based upon your situation, you have to identify your prime time based upon your situation. That defines your edge. Your edge isn't just about your trading setup. Your edge isn't just about your stop location. Your edge is, when do I trade? Your edge is, based upon the type of day it is, I'm going to apply these strategies. That's my edge. I know it's a long day, so I'm going to be buying pullbacks. I know it's a trending day, so I'm going to be buying pullbacks. I know it's a narrow range day, so I'm going to be doing reversal trades at extremes. That's your edge. Knowing the type of day it is, knowing what time to trade, that puts you in a category to where you're playing with house money. You're playing with the professionals. Because again, the key of every trade, and I say this over and again, you'll see these in a lot of my videos. The job as you as a trader is to look at the market and find the opportunities. Okay, I understand here's an opportunity. I know if the market gets to this, that if then scenario, if the market does this, then I'm going to do it. But it's not just identifying the opportunity, it's about applying the right strategies to the opportunity. That's your job as a trader. That's what it's about when you're trying to be a high probability trader. And again, I'm going to end with this: responsive trades, initiating trades. Do you know what time it is? Responsive trades, that's when the market's in a narrow range. That's when you want to trade the extremes, short the highs, buy the lows, because the market's just going in a range. Versus initiative trade, that's when the market's high volatility, it's trending. We want to initiate new positions because we want to catch that move going forward. That's understanding the time of day it is. That's understanding the type of day it is. That's applying the right strategies to the right situation. That allows us to understand the playing field. It allows us to trade with odds in our favor, and we're distinguishing between high and low trades. Why would you short the highs on a trending day? In the end, as you know, I said this is all really about psychology trading. It's all about preparing your mind to trade, and we said our last video is going to be about that. But in the end, if you purchase a new trading system, if you watch my videos, if you have this new fancy indicator, no matter what thing you do that's external, if you don't pull the trigger, if you're not able to pull the trigger, then it doesn't make a difference. And that's why we have to train our minds. That's why we have to document. And we'll talk about that later. But it doesn't make a difference. All these things you're doing that are external, you have to be prepared internal to trade the market. We do have a couple of resources for you. First, we want to make sure that you can follow us on YouTube, Facebook, and Twitter. Move Up with Mike is on YouTube. That's our channel on YouTube. We also have Move Up with Mike on our Twitter. Facebook, we have Are You Financially Literate? We do have two products for you. We have our instructional video series. It's just $50. And again, it's really about the basics, putting together your trading plan, components, and understanding the different setups on the market. But in addition to that, you also get a half hour with me. I throw that in, to make sure after you watch all those videos, that you're able to put them together and apply them to you. As I said at the very beginning, so many people make a mistake when they go on Google, go on YouTube, and they find these strategies, and they apply them, but they don't apply them based upon who they are as a trader. They apply them as what they see. And a lot of times, mentally, they can't trade that because it requires too big of a stop. Or maybe you could trade it, but you don't have enough money. Maybe they're going to have $10,000 for the setup, and you're only trading $100. Well, you can't do what they want to do. So I want to talk with you when you get these video series so that we can talk about how to apply it for you. Or maybe you don't even be bothered with the video series. I do one-on-one coaching. You can sign up for there. So michaelglass.com/video for the video series. There is a bonus half-hour session with me. Or if you want to go straight to one-on-one sessions, I offer those coaching also. Thanks, guys. Make sure you go on to video number 2, Technically Speaking.